All right, hey, good afternoon, everyone. All right, big wild day, kind of as expected. You never know what the USDA is going to throw at you or how traders are going to digest it. And a lot of times you want to see the day of the report. You get about 2.5 hours to trade whatever news that they give, and then you get to this week we get Thursday and Friday to trade it. So usually by day 2 or 3, it just takes some time for the market to digest whatever it is that the USDA is going to throw at us. So let's kind of go through. This is corn. This is December corn. Here's the big nasty down day that it had, but it was it was down 18. Is that bad? I don't really know. I was thinking that we may pop a little bit, but beans didn't give us the bullish fodder that we wanted. And so the initial reaction to the report across the board was bearish. Now, whether or not it stays that way, I think is a little bit different story. And so we're going to do a couple things here real quick. We're going to go through the reports, what they said, and then we're going to look at the price action, and we're going to look at it at different time frames so you can see how they're actually behaving. Okay, here is the WASDE report. Here's corn, and I apologize if this is a little bit slow. Let me try to blow it up here for you. All right, so corn, right? This is the acreage number that they went with. I think it's interesting that area planted went up 2.1, but they actually increased harvested acreage by 2.2 million bushels or million acres. That's not that big a deal. They did drop the corn yield by 4, but then this is kind of surprising. They actually tightened beginning stocks even tighter than what they had before, and they didn't touch demand. They didn't move it at all, and that netted out to a net result of a 5 million bushel increase in ending stocks. And the trade, this is right in line with expectations. It really didn't do anything outside of that, and then we just sold it off. So I think there was just some people that wanted to get hedged. Certainly there's no super bullish surprises in here, but there's still a long way to go. So I don't think that the downside is where you want to be in corn. I think that that there's a rally coming, and we'll get to that here in just a second. And so let's go down and look at our soybean market. All right, so soybeans, this is what was really pretty bearish today. There's the two things. Number one, the USDA did not reduce the soybean yield. They did reduce corn. They did not reduce soybean, and they trimmed the demand number on soybeans. So trimming demand, and they did this in exports and in domestic crush. You can see they lowered it just by a little bit, and they decreased the exports. So the net result was a decrease in overall usage, and they held the yield. And so shockingly, you can lose all the acreage, but then they decrease the ending carryout by 50 million bushels, and that is above what the trade was expecting. So it had a big bearish day, right? It just kept coming lower. So from a bean perspective, bulls didn't get what they wanted, and the USDA did not ignite a rationing rally like they did 2 weeks ago, and so lower they went. All right, now what we want to see here is how is the action. This is a big wild move, and so your technical indicators, like your oscillators, when you have a giant move like this, they tend to get out of whack or out of balance because the market moves too fast for you to really digest it. So, and you can kind of see this over here. This was nice and steady, and you can see the histograms just kind of, before these moves here, these histograms looked really big. When these big explosive moves happen, it expands the histogram and it distorts things pretty dramatically. And that's why you don't see a divergence here on the MACD histogram because this thing distorted it by so much. Otherwise, I think this would look more like our RSI, which doesn't account for which is weighted a little bit differently. And so you do see the divergence from wave this low to today's trading action. You do see the divergence across that. You see a divergence here, and you see a divergence here, and you know that because the RSI has not exceeded the low that was set back in May, even though price has. So that is a warning sign to the bears that, hey, you guys either need to jump on and pummel this thing and take it lower, or we're trying to beat out a bottom here. Stochastics, same thing. They're oversold. We do have a divergence on them, although it's not quite as pronounced as the RSI, but nevertheless, I think where corn goes over the next 5 or 6 days is really, really important. But I think that we're looking for a low to form right in this territory in here, and then a move back up into this territory here. I don't think anything that we saw today changes that analysis. We're just going to have to wait a little bit longer for it. Soybeans, today's day was a big bearish hook reversal, right? We took out the high of yesterday, we took out the full body of yesterday, and the full candlestick body of Monday, and really just undid all of this stuff because we didn't tighten as much as the USDA, as much as the traders were looking for. So that puts this point right here front and center, right? This low is a critical low. So we want to trade long above it and we want to trade short below it. If we go down to a 240-minute chart, you can see that crystal clear. Here's that low right here at 1315. That's below the 4-hour cloud. That's something that you want to move with. And we'll have to see if the trade wants to go with the USDA's numbers or wants to start trading something tighter because maybe the yield isn't 52, maybe it's 51, or maybe it's 50.5. If you look at the yield numbers on soybeans, if you take 52, if you take 1 by 82.7, 1 bushel is 82 million bushels off of the supply number. So that goes to a 212 or a 218. 2 bushel an acre, right? That's 16 million. It's 160 million bushels. That takes you way, way down. So there's not a whole lot of room for error here for soybeans to absorb much yield decline, and the USDA has kind of taken some of the surprise numbers out of the way because they can't decrease demand too much, or otherwise they'll create a scare. So keep an eye on how beans trade the next few days, because I still think that is enough. With a good excellent rating at 51, that or up 1 from last week, and still pretty bad, that's still enough to generate some tightness fears, to forge a bottom in beans and potentially send them higher, which will be supportive to corn. And then the last thing that we want to kind of talk about is the wheat market. Wheat, volatile day, but it didn't get outside of its wedge. So at the end of the day, the story in wheat is we're still in the same wedge. We're still chopping around sideways, and there's nothing really to write home about, and we need more price action to determine what it is. So with that, I'm going to wrap it up. Remember, there's always risk in futures and options. Tomorrow and Friday are big days. We'll keep you posted on how those go, and we'll be real patient to see how the market reacts. If you're trading these markets, make sure you're doing so in light of your own financial condition, and proceeding accordingly. Have a great afternoon. We'll talk to you tomorrow.